It's already 50 people watching, waiting for us. Yeah, and we're live. Welcome back, everybody, to my YouTube channel, Cryptocito here. Today we have a very different format for the first time. Let's see how it goes. We have a little debate going on here, but I think it's going to be very civil. I think it will be a very productive debate, I hope. So yeah, I'm joined by Jack, who is, I guess, the unofficial co-host of Cryptocito. You definitely don't need an introduction. But this is the first time to have Kyle on here, Kyle Samani. I'm really excited to have you on. How are you guys doing, first of all? Kyle, how are you? What's up?
I'm doing great, guys. I've had a good morning, been firing away since 7 a.m. and back-to-back meetings. So kind of normal day in the life of Kyle.
Nice. And then Jack, what's up? You already prepped up with the Cosmos shirt. You ready?
Oh, yeah. I've got my Cosmos security shirt on. Thank you, Billy, for sending me one. I appreciate it. Yeah, ready to go. Also, it started my meeting day at 7 a.m. All those Europe folks just do not want to wait.
I like it. You're both in a very good mood. The day is just starting for you guys. Here it's already 7 p.m. in Lisbon. But I think we can get right into it. I mean, Jack, you're very, very well connected and well known also in the Cosmos community as a core contributor also to IBC over the past years. And Kyle, co-founder of Multicoin Capital, which is an investment firm that invests predominantly into crypto assets. I think you're also very well known for your early bet in Solana. And so the thread that kicked this conversation off just 2-3 weeks ago was basically that somebody said, this is the end game for crypto, and then a few points, and then Kyle jumped in and said, I think this Appchains thesis is wrong, at least 98% of it. And then obviously a lot of cosmonauts jumped on it. And here we are today to discuss this. But Kyle, since you started kind of like this Appchain thesis is wrong debate, maybe why don't you start with just sharing your general views on how do you see the crypto endgame as we move forward? What do you think? What is the fundamental thesis that is the endgame for crypto, in your opinion?
So I think we will have 2, maybe 3 L1s that comprise 90% of the total market cap of all L1s. And I think with extremely high conviction that Bitcoin will not be one of them. Ethereum may be one of them, although I'm not really that confident in that either. But the Bitcoin, I think it's no chance. And then the question is, what kind of lives around those 2 or 3 or 4 L1s that comprise most of the value? Maybe there are some rollups, maybe there are some app chains, maybe there are some side chains, maybe there are some temporary chains that come in and out. That's a little murkier and harder to reason about. But I'm generally fairly optimistic that like the vast majority of activity will happen in just a handful of places. And then to the extent you have things that settle back to the main chain, those will also exist, but I don't think there's going to be that many. I don't think there's going to be, millions of them that are settling back in any like reasonable cadence. It's kind of my gut of where this all nuts out.
So your end game is, just to summarize, 2 to 3 L1s that absorb all the traffic, basically, or most of the traffic for applications, and then those applications are built on top of these layer ones. And we can also get into it later a little bit. What do you think the best contenders are to absorb most of this traffic? But I think, Jack, you have a different opinion on that. Is that right?
I do. Yeah. I just want to, Kyle, I'm guessing your assumption here is that because individual chains offer synchronous composability, this is going to be the strongest driver towards those individual, like value accreting in those L1s. Is that your kind of thesis there?
That's part of it. I don't think it's strictly about synchronous versus asynchronous composability. I think it's a little broader than that too. I've wondered this a lot. As a general statement about all decisions, the correct way to make all decisions is to pick the right variable to optimize for and then optimize for that one variable, doing multivariate analyses and then weighting different preferences or whatever, like with different point systems, is almost always stupid. And so the question is like, what variable are you actually optimizing for at the ecosystem level? And that is very not obvious. I've gone back and forth on this, but the thing I've kind of settled on is you want to optimized for minimizing the surface area for social coordination. If you read the original Solana essay that I wrote in May of 2021, which is called Technical Scalability Creates Social Scalability, those two statements are actually corollaries of one another. But actually, I think the more useful framing is to minimize the surface area for social coordination.
Interesting.
And my biggest problem with the Appchain thesis, or actually one of my big problems with the Appchain thesis is it's just increasing complexity at kind of every layer of the stack. Wallets, indexing services, middleware providers, user experience, latency, gap, just like, and not that any of these problems are individually not tractable. Without question, every single technical problem there is tractable. But the more social friction you create, and remember, in these blockchain systems, inherently, you have different parties who are not coordinating with one another, who are building these different pieces of the stack. They have, in many cases, different motivations. They are also all over the world. They speak different languages. They're in different time zones. And making all of that collectively work together, I think, generally speaking, most core crypto developers do not appreciate the social complexity that comes from making all of those layers of the stack work together.
Awesome. Okay, cool. That is some excellent clarification there. So yeah, I guess on my side, I look at this kind of the same way that we look at the history of the internet, and I view individual chains as kind of like individual computers. And in the same way that we were never able to scale one supercomputer up to the point where it was able to handle all of global traffic. You know, if you go back to the 50s, 60s, 70s even, you'll see these visualizations of the mainframe and all the terminals. And that's kind of where we're at with the existing smart contracting platforms. And, you know, when we're talking about 2 to 3 L1s, like, I think that's kind of what Kyle's talking about too, where you'll have these individual computers that will handle most of the traffic. Now, you know, the ability to do transaction parallelization and some of these things, like, those are very difficult technical problems, but are also tractable as well and could extend the life of some of these L1s. But I think a more likely scenario is exactly what played out with the internet. You know, we figure out a common language for these different ecosystems to talk to each other, and then we can sort of horizontally scale out to as many chains that are needed to support the economic activity that happens. I think this is also net positive for decentralization and kind of censorship resistance, and especially when we're talking about in a post-Tornado Cash OFAC era, these topics are once again more relevant. I think many different chains with different consensuses and different makeups in terms of where their nodes are run, and some are more centralized, some are more decentralized. This is a much more likely future. And some of those problems around the quote unquote social scalability of this type of system are overblown. And we have existing technical solutions, things like DNS, and IBC, obviously a lot like Internet Protocol, to help overcome these. So that would be kind of how I'd frame my thesis around this. And what does the world look like when this is truly scaled? Users won't know which chain they're using. And in fact, with any given transaction, they may be using multiple different chains. All of that complexity will be abstracted out by wallets and other client software. And the same way there's hundreds of thousands of corporations that provide people all these different goods and services today, there will be hundreds of thousands of chains that provide these people goods and services in the future.
Now, everybody that is listening right now, make sure you share this live stream with all your friends on Twitter, on Telegram, everywhere. This must be heard by everybody in crypto. Very, very solid opening statements from both of you guys. Now, the big question obviously is, Kyle, if what you say is true, who are these 2-3 big platforms that absorb most of this traffic, right? We all wish to detect them today so we can invest and also make a bunch of money with it. But I guess the bigger question is, what makes a crypto ecosystem, aka layer 1? What does it make it sustainable and complete? And maybe you can also name some projects. Obviously, I guess Solana is one of your biggest convictions out there. But what do you think, which project or ecosystem is working best towards becoming a very sustainable and complete ecosystem in the long run?
Yeah. So I'm going to push back on part of the question, because I think the question implies some degrees of certainty that are fundamentally unknowable at the current moment in time, which is this notion of sustainability. I don't know what it means to have a sustainable blockchain. I don't think anything that currently exists is even remotely like if the definition of sustainable is you stop updating the code today and that piece of code must run in perpetuity, economically and everything else, whatever, right? And it must work. There's absolutely no chance that anything that exists today meets that definition. How do you reason about fees versus inflation and like all those games? Again, like there's been a lot of research done on this. I'm not particularly convinced that any of it is super useful, or I shouldn't say that useful. I don't think any of it you can make strong projections about some sort of binary statement of the nature of is this thing sustainable or not. So I don't like the premise of the question. I do think that what matters is path dependence, and that as long as an ecosystem is growing and continues to grow, then there is incentive for people to figure out how to make it sustainable, whatever the word sustainable ends up meaning in some long run period of time. So I'm going to push back on that as a somewhat semantic, but I think important designation. Basically, the only variable that matters is rate of growth of ecosystem. In kind of answering the question of like which blockchains win in the long run. And then the kind of corollary question from that is like, what are the things that prevent an ecosystem from growing? Basically, there's only one variable that matters there, which is like, loosely speaking, scalability. I realize there's different permutations of that and like cross-chain and one-chain and rollout. Like these are fuzzy and not strictly fungible concepts. But like, loosely speaking, the only variable that matters in the long run that will actually determine which blockchains win is basically scalability. I don't think any other variable at all is even close in importance. And then the kind of next step in the logic from that is, well, what's the best way to maximize scalability in a historically path-dependent, useful way? And the answer to that is, in my opinion, is just scale the L1s as much as possible. It's not that complicated to scale an L1. There are some limits, obviously, like you have the speed of light, you have whatever heat dissipation in a CPU or in a GPU. Those are kind of the primary limits you're going to hit. But like you can get that pretty far. And then like if you separate compute and data later, like go for it. You can do that later. That's fine. But just like do that. And Solana and Aptos are the two, in our opinion, kind of strongest on-shot targets, on-shots at just maximizing L1 throughput. And then maybe there's side chains later, maybe there's L2s later. But like you don't need to deal with those options and the additional complexity that comes with those options until some later point in time.
So you're basically saying scalability is super important, maybe the most important one point, and also the rate of growth of the network. I have a quick follow-up question to that before we get to Jack. I mean, we've seen it in crypto. Every cycle, there's a new big thing, the next big Ethereum killer. A couple of years ago, it has been EOS, and I remember the NEMs and NEOs, right? They were also promised to be super fast and like, you know, killing Ethereum overnight, but they never really gained that traction. They never really managed to take any market share.
Ow.
Why do you think? But we can get this in a second. Why do you think?
I can give
right.
Kyle's point here. The quality of developer that's come in, and you look at the folks who work on Solana and sort of their backgrounds in sort of traditional database design, as well as the folks from Facebook and Aptos and their backgrounds in traditional database design. And I think that the quality of folks coming into the ecosystem and the technical caliber of the teams working on these problems in terms of like individual L1 scalability is just orders of magnitude greater. Yeah,
so I think that's what I wanted to get to. Is like, how do you see as a probably like retail investor, how do you know which project is legit and is really trying to do something innovative, and how do you not fall into this trap that you're just falling for another narrative? Because these chains, right, they come up every 2-3 years and then they just die out or never really gain any traction.
I mean, what I would say to Kyle's scalability point just a second ago that's sort of related to this is, before I worked in blockchains, I worked at this company called InfluxDB, which had a single database node. You could do 1 million inserts a second on it, time series databases. And there has been generations of people building these faster and faster databases. And there's a lot of prior art there. you know, if you want to build a blockchain ecosystem that does actually scale to 7 billion people, I don't think we have the database technology to build a database where 2 or 3 of these things can support all of the economic activity that 7 billion people have, or 95+% of it in Kyle's case. So, you know, I think that's kind of the fundamental thing. And in terms of scalability, I think that one underappreciated factor is developer ease of use and the ability to much more quickly onboard new developers onto the ecosystem. This is, you know, Steve Ballmer understood this back in the early 2000s. And I think every great tech company that's come through has also understood this. You need to make your software easy and understandable for this sort of mass market developer audience in order to become in order to be really scalable. Because if you can't do that, it's going to take a long time to onboard new developers. And platforms that figure out how to onboard new developers faster will end up winning. And, you know, that's something we've worked on really hard in Cosmos. And I think that, you know, when you're focusing on technical scalability of throughput, you end up sacrificing developer scalability. And that's kind of a big negative I see in some of these platforms.
Do you have any comment on that, Kyle?
Yeah. So a couple things. One thing we know about the history of computer science is that there's not one programming model to rule them all. Like programming models they're heterogeneous. So the idea that there's going to be one programming model to rule them all is like very, very, very stupid. And that was why I was so strongly anti-EVM for a long period of time, and actually more so today.
Also, EVM's bad.
Yes,
something we can totally agree on, Kyle.
Right. So the kind of A. B. What? Like fundamentally with a blockchain computer, kind of sort of right. The goal is, in some loose sense, is to get 7 billion people to use the same computer at the same time, and that is like probably impossible. And if not impossible, then just like extraordinarily difficult. But given that reality, and you have some set of shared resources for many people to use, efficiency matters, like in a deep way. The same is true, by the way, when from desktop to mobile, like battery efficiency mattered, right? It was just like a new vector of design that just like was deeply underappreciated by like the world at large, like software and hardware developers at large. Blockchains are a new kind of programming environment with new economic variables. And so while I agree that obviously you want the developer tools to be as easy to use as possible, that is obviously a thing you should want. If you decrease efficiency of code execution, that is less clear to me that trade-off is worthwhile, given the economic realities of the new runtime. I generally think most people have thought about that trade-off incorrectly. One of the core assumptions of all of internet economics and software has been zero marginal cost. Like that kind of undergirds all of the economics of every major Web2 company out there. And Web3 breaks that assumption. Like executing code is no longer free. And when you break that assumption, it really changes like everything else in the entire design of the system. A lot of assumptions break when you change that. And so that's kind of led us to, like, for example, Solana was very well known early on for being very, very non-friendly to use for developers. And like we were eyes wide open, that was the case. But we thought that was the wrong variable to optimize for. And like you can build abstractions, like anchors made things a lot better and other things over time. It's still by no means nearly as easy to use as Solidity. Like again, that's the wrong variable to optimize for, given the new economic reality of cost of code execution.
Jack, maybe you can share what is your what project, what ecosystem, and I guess Cosmos.
Yeah.
Why do you think it's working best towards this vision of becoming a long-term sustainable ecosystem?
I think for many reasons, you know, I want to applaud Solana for having one of the highest Nakamoto coefficients out there as far as individual chains. You know, I think that the ability to sort of continue to provide sovereignty and independence is a key part of blockchains as a whole and sort of an underappreciated piece. People talk about decentralization a lot in this ecosystem, but we have things like the Ethereum Foundation talking about decentralization for a really long time and ending up with 4 to 5 entities substantially in control of the ETH POS system. I think for these reasons, relying on individual chains is likely to prove not effective. And what we need to do is have many of these things to provide the type of effective decentralization and censorship resistance that we're going to need as an ecosystem to kind of survive. So that's A. B, Kyle and I kind of disagree on the scalability of individual chains. I don't think it's necessarily possible to scale those chains in order to reach those number of people. And that kind of changes my arithmetic on how much do we optimize for machine usability versus how much do we optimize for human usability. And, I think the different ecosystems that we're involved in sort of show those trade-offs in broader scope. Cosmos is optimized for interconnection, interoperability. Most of the work that Strangelove, which is my company right now, is doing is to re-enable asynchronous composability. So really focusing on general message passing and the ability for contracts on different chains to call each other and building developer ease of use around those patterns. So yeah, those are some of the things that I would say there.
I want to bring up dYdX. dYdX has been an example of a product that launched on Ethereum, then moved to its L2 for scalability. And now they announced just a couple of weeks ago that they will launch their app chain on Cosmos after intensive research. So I wanted to hear both of your guys' takes. What do you think is part of their decision making, and what are some of the pros and cons? Maybe Jack, if you want to start.
Yeah, applications, many of which exist out there, especially the more complex ones, need the ability to dip down into the lower layers of the stack to optimize for their specific use cases. And if you're building an order book and a sort of derivatives exchange like what dYdX has, they went out there and they looked at everything and they said, we need the ability to optimize the bottom layers of the stack, and we need a modular framework that enables us to do that. And they found Cosmos, where we've been building this way for years. Celestia is out there pushing this modularity narrative. They're very much a part of Cosmos, and we've been building this way for a long time, which is why Celestia ended up in Cosmos.
And then Kyle, what do you think about the move from dYdX? Do you think it's been a good decision, or is that going to be bad for them in the long run?
Yeah. So I said, I think my original comment that kind of sparked this podcast was the Appchain thesis is 98% wrong. So I want to kind of unpack what that 2% is. I think that's kind of, and dYdX is like the kind of centerpiece example of that. I've been asking Cosmos and Polkadot developer type people for years now, you say you want the system to be configurable. Like, okay, that sounds good, but like specifically, what are the variables that people want to configure? And actually, correction, what are the variables that are actually useful to configure? And the responses to that, I've asked that question, 50 times to 50 different kind of core developer types over, a several year period. And there's been basically no good answer, other than like sovereignty. Just like, you want to be sovereign for the sake of sovereignty, that's a legitimate answer, and obviously has its place in the world. But assuming you're not optimizing for consensus sovereignty for the sake of consensus sovereignty, there's basically no good answer to that question. The correct answer to that question is go as fast as possible, be as cheap as possible, and support a diversity of programming models that maximize efficiency. And like, that's basically it. And like DAGs versus blockchain data structures are all mechanical details. No one actually gives a shit. Talking about like arbitrary subsidizing storage or like changing gas codes is just like all playing economic games that are not sustainable by definition. So like, I've heard a bunch of these things and I've just found them to be all garbage. The only real application I have seen that like really justifiably may only work by fundamentally modifying consensus is something that looks like dYdX, which is you want to have a limit order book, and you want to have that limit order book live in memory, but not be committed to state updates in the chain. That is some set of trade-offs that they have, right? Like their view is that is the optimal basically design parameters for the system. You cannot do that in Solana or in even Cosmos default, you have to modify Cosmos pretty substantially to get there. Right? And like there's some case that like that is in fact the optimal way to run a decentralized limit order book. If that's in fact the case, then you need that kind of configurability. But basically the only class of application I have seen that actually justifies modifying consensus is basically anything that's DEX related. So Thorchain did this with their, they automated the transaction orders in the per block based on the amount of fees paid, which is very clever. Mangata is doing this in Polkadot land to basically encrypt transactions so you can't have MEV. Osmosis does the same thing. The only people I have actually seen modify consensus for some intelligent reason, other than they want to because they're like intellectually curious, are DEX-related applications. And that's kind of inherent to the nature of MEV, and inherent to the nature of trading and like low latency and HFT and all of this kind of adversarial environments that come around trading. So I think I applaud dYdX for like having the courage to get up and move and try something. I think that's a net good experiment that's being run. Exchange is by definition the hardest type of application you can build on the internet because money is involved. It is very low latency, and everyone is fucking demanding highest performance at all times. And there's actually no other class of application that has that high of demand. Every other application, you can relax one of those assumptions, whether it's the money part or the latency part or the performance part or whatever. But like in trading, you cannot relax any of those assumptions, and it's right 24/7. And so there is a case to be made that the optimal DEX should break composability, should not have limit orders on chain, right? Like whatever, like maybe there's some other mechanical trade-offs that they're making changes. I'm not exactly sure. There's some case to be made that to get actually useful DEX performance, you need to do that. I'm not actually convinced that is the case or not, and we'll kind of see over the next couple of years how, let's say, Mango or fares versus dYdX. But certainly that is a possible way that like the physics plays out.
I think, just to sort of zero in on one point you made there just a second ago, sovereignty. It's easy to dismiss this desire for sovereignty and to view it as kind of economically low value. But over and over again, we have users showing up in Cosmos, demanding their own runtimes, demanding their own blockchain. And a lot of that ends up, when you talk to them, it ends up coming down to sovereignty. And, Kyle just really put it well, why exchanges would want that. I think video games are another area where this is going to be increasingly important. That's another low latency, high demand area. I think IoT and sensor data, as well as the ability to sort of monetize that, is another area where this is going to be really important. Things around privacy. So I think that there's many more of these applications out there. And the fact that blockchains haven't been able to tap those markets yet is due to the fact that we haven't sort of scaled to the point where that's possible. And I think right now we're sort of reaching this inflection point with the technology where some of those new applications are possible. And this is why we're seeing an influx of developers into Cosmos and many, many more people excited about the Appchain thesis right now.
I want to talk about sovereignty a little more. So there are clearly political reasons to want sovereignty. There's also good like long-term economic experimentation reasons to want it as well. In the sense of like, we don't know which runtime is the best or whatever. Like there's other political variables at play. Like, I don't know, should Vitalik be the spiritual leader of crypto, or should it be Anatoly, or should it be Mo? And like, these are weird subjective questions, but actually like a lot of people hold opinions on this fairly strongly, although they won't express them publicly. And
very, very well said, Kyle.
Yeah. So there is real open questions on sovereignty. But one thing, and there's also legitimate reasons for different parties to want to be sovereign, and I fully respect that. The one area I'd push back on is I think most people who claim to want sovereignty are wrong. Not all, but most. Like 95%. I think probably. And I think mostly it's a function of either misunderstanding the point of crypto systems or just like wanting control for the sake of wanting control, because like that's just like how they're wired. But I generally think that you'd actually, most of these if you really want to maximize credible neutrality of your system in the long run, you should want to actually be on some sort of shared open ledger. Now, if there's some performance reason why that is implausible, given physics, then like that justifies moving elsewhere. And I think dYdX is really the only serious experiment that kind of testing that right now. And like I say, but like I haven't really seen any of the others. That doesn't preclude many gaming specific chains from existing. The gaming universe in particular seems to have a pretty strong proclivity to want to control their own chain. There's just something about the culture of video game developers that like leads to that. I don't appreciate the nature of the culture of those firms to understand why and how that is the case, but it clearly is the case.
I have a thesis
and so
as to
it
why
will
that's the case.
It will happen in gaming land specifically for sure, just as a function of like culture.
I think that one of the reasons why that is the case is that a lot of those game developers came out of the Web 2 gaming world where they were rugged by platforms repeatedly. And many of those folks said, okay, well, if I'm going to get rugged by Facebook or Google, or, you know, we can all think of like Stadia or Farmville, or, you know, just the list goes on. And this is a major reason to want sovereignty. You want to remove platform risk. And when you use a shared L1, you expose yourself to a significant amount of platform risk. And a lot of times that gets expressed as developers saying things like, well, I just want it because I want to control it. But in reality, what they're looking for is platform independence, and to sort of eliminate these dependencies that might end up tripping them up and slowing them down.
Yeah, I mean, I understand that's what people say, and I understand why they come to that conclusion. I actually think their understanding of the nature of Web3 systems and that specific logical flow is exactly the opposite of reality. I think the way to actually minimize platform risk in the long run is by being on open, shared, permissionless, credibly neutral state and systems, even if that may come with some short-term hiccups. But I actually think in the long run, if you want to be maximally platform independent, you do not want to live in your own island.
So credible neutrality is one I kind of want to dig into a little bit. I would want credible neutrality from the underlying software implementations, i.e. Linux, but I don't necessarily want credible neutrality from the specific Linux implementation I'm using. I want it to be very specific to me. And I think that that's an example of sort of like why developers want these application-specific blockchains is they want well-supported sort of underlying software, but the running of it and the specific implementation, they want control over. And I think we're much more likely to see credible neutrality come in at that level rather than on the individual L1 level, where there's all, as you mentioned, these political concerns that keep popping up over and over again that are kind of messy, that are going to end up sort of describing how the world ends up happening.
It's possible that's the right vector. I'm fairly skeptical. I think in an ideal world, no one actually like wants to deal with the financial back end. And in fact, the more you deal with the financial back end, the more you're exposing yourself to all kinds of other shit. MSB and who knows what else, like other licenses. And then also just like you have to deal with your own validators, your own community, and you have your own fork of the system. Like you increase a lot of overhead for your internal team and for your external comms and messaging by doing that. And again, today there may be some gains from that for sure. As these systems ossify and stabilize, that becomes less and less of the case over time.
Do we ossify and stabilize in a world in which there are many chains and asynchronous composability becomes dominant? Or do we ossify and stabilize in a 2 to 3 platform credible neutrality world? And I think that the short-term vectors are pushing us much more towards ossifying in this asynchronous composability, many chains world. But, you know, that's just the way I see it.
Yeah, I thought about this a lot. Path dependence is one of the most important things to reason about in how the world will play out. Definitely the easiest technical thing in the near term is for everyone to share one L1. That has problems for sure, but it's just easier. Like there's one indexing and query system, and like there's one read write, and you don't have bridges, you don't have all those latency things, and like all that other shit just gets more and more complicated. And exchanges are confused, and wallets are confused, and like you can solve all these problems, but it's just easiest if everyone reads and writes from the same place, which is why ETH L1 became ETH L1, like is precisely for that reason. Therefore, I think the path-dependent way to think through the problem is to maximize that vector and slowly add on other scalability variables as necessary, whether they're side chains or drive chains or supernets or subnets or whatever. There's all kinds of configurations.
Flavor of the month.
Yeah. I'm not really opposed to any particular configuration. I just think it's the easiest thing I mean, it's fairly obvious. It's the easiest thing in the near term for everyone to live in one place. You will eventually max that out. That's not a question. But we're not even close to maxing that out now. And I don't think we're even close to maxing that out in 2 or 3 years. I think in 6 or 7 or 8 years, we could be maxing that out, but we're not close to it. Just in terms of software optimizations, plus just growth in hardware.
I think it's really easy to look at the ETH-L1 thing and say, okay, well, all of these things popped up on ETH-L1, therefore that's the way it's going to happen. I think we've seen this progressive wave of more and more chains spinning out in every blockchain cycle. And if we go back and look at it, starting with the original Bitcoin, we had the first shitcoins in 2011, and those folks each spun up their own sort of proof of work consensuses and new forks. We saw this again in 2013, 2014, and then in 2015, that's when we saw Ethereum come. And that was the first sort of shared smart contracting platform. And then in 2017, we saw this explosion of other shared smart contracting platforms. And that was sort of another spin out. And this is where the Cosmos Appchain thesis came from. And we started building at that point with IBC and interoperability. But, you know, I think every cycle we're seeing sort of like what worked in the last cycle, and people are trying to compete for that. And I think that this like single chain credible neutrality thing that, you know, Kyle, you represent a lot of folks out there who believe this, and we here in Cosmos are by far the minority on this. So totally willing to admit that. But I think that what is much more likely is we see this world with many, many chains, which is what we've seen over and over again throughout the past.
I wanted to get Kyle's thoughts on the positioning of the Cosmos Hub, because the Cosmos Hub is now implementing Interchain Security. So it will also act as a security hub for other chains and platforms to launch on top of the hub, or as a consumer chain to the hub, which is more similar to the relay chain, parachain model that Polkadot has. Do you think that this is a smart way to go for the hub as the chain in Cosmos, the longest, the oldest, the biggest? Or what are your thoughts on that?
I have some thoughts here. Jack probably knows a few more things than I do. I was curious for him to either answer some of my open questions and or push back on.
Yeah, I'd love to.
So as a general statement in the history of software, that what's been tried many times has been people invent standard is good. They then tell all the developers to use a standard and then pray that like value accrues back to the base thing. This has basically never worked. And you see in modern instantiations of this, like the most obvious kind of recent one in crypto is Lens. Because it turns out developers will like do whatever they want and just aren't going to listen to you and your standard for greed reasons and like other reasons as well. And so I kind of look at the Atom Hub in a similar respect, like especially in the context of Interchain Security, that kind of strikes me as a similar thing. The analogy is not perfect, but I think it's okay. And the reason for that is because like it turns out when a chain is small and the economic value securing the chain is small, it also means inherently the chain is not very valuable. Like those two things are kind of inherently coupled, right? Like the degree of economic activity happening, like no one gives a shit, and it's just like it's not worth attacking things that people don't give a shit about, because they're not useful anyways. So and like as your system becomes useful and it justifies being attacked, it's like okay, well like assuming you have a way to accrue value back to the L1 token, then like it should become more valuable over time, and like you get the economic security. So I've been fairly skeptical of like the rent security from other chain model for kind of that reason. Kind of comment A, I could be wrong there, but like that's my intuition for how it plays out. And then comment B, oh, I had another thought here. Sorry. Oh, there's just a lot of open questions about how interchain security will work. I asked Zaki some of these questions a few months ago, and he did not have answers. Maybe there are answers now. But I recall like the largest set of questions was like, what are the 2/3 thresholds if only a part of the Atom people are redelegating or resecuring? And like, just a bunch of mechanical questions come up because you have to assume not 100% participation between the various Atom stakers and then all of the other stakers too, right? And I don't think all those questions are answered, although I could be wrong.
No. So, you know, I think that what I would say about Interchain Security specifically, is this is one vector for the hub to capture value out of this huge network we've created. And I think Kyle's point initially around it being extremely hard to create this open source product that's hugely successful and then like bake in value capture afterwards, that is a hard challenge. Now, I would say it's been done many times. You know, Linux is a great example. Linus didn't end up capturing the value, but Red Hat did, and that became a multi-billion-dollar company. If you look at what Google did with Kubernetes, winning the container wars, they beat Docker and Mesos and many, many other projects by creating this thing called Kubernetes, paving the space, and then building value capture in on top of that. So I think that there are many examples of open source projects actually doing that successfully. It's hard. It takes a lot of experimentation. And because this new technology is kind of inherently disruptive, it's not always clear where the value capture is going to show up. This is why I've always worked for things like interchain routing and chain naming service, which a lot of people think are kind of weird and esoteric. But I think also, if you look out at this world in which there are tens of thousands of chains, you know, those things end up becoming important and can become huge value capture mechanisms. Look at the way Cisco captured a ton of value with their router business as the internet scaled. So, you know, I agree with Kyle. There's a lot of, you know, the initial version of Interchain Security is very simple. You know, every validator on the hub validates all of these subchains, and all of the fees from those subchains end up accruing back to the atom holder, the staked atom holder set. This very simple model will only scale to the first 10 or 20 chains likely, and then we'll need to find a new model where only fractions of the staked atom distribution secure some of these subchains with much more interesting economic relationships. Those things will take more time to evolve. Maybe the Cosmos Hub becomes a settlement layer for Celestia. This is another way to do it. You know, but this is why I think things like chain naming service, i.e. becoming the DNS for IBC and becoming this sort of source of truth around the provenance of data throughout the entire ecosystem, and then being able to build value capture on top of that becomes really interesting. So anyway, yeah, I agree with you on a lot of that stuff, Kyle, but I think that there's many more examples of successful open source projects actually capturing value than folks want to think.
Yeah, I think your point on settlement layers is interesting. And I think that, like, again, in a world where there's 2 or 3 chains that capture 90% of the total market cap, I think those basically become the settlement layer. And whether they're using IBC as a standard or some other Solana equivalent or Appchains equivalent or whatever as a interchain standard, I think that ends up being basically the settlement layer. Where are all the assets issued? Where do they live? And like, where's the place you bring your money back to, right? We already kind of have this now of like, you can move, you have your checking account, which is where most people keep most of their cash. And then like they have money in PayPal or in Venmo, they may have money in their Steam accounts, but like typically those are a small fraction of the money they have in their checking account kind of as total. And then, but whenever you want to withdraw from Steam or withdraw from Venmo or PayPal, right? Like they come back to like your bank account. I think like we end up likely in some sort of similar type of configuration.
As we're wrapping up the debate, I know time is short. We're already at almost 45 minutes. Final question. Let's start with Kyle. If the Appchains thesis is wrong, would you say at least 98% of it is wrong? What's the alternative? What's the alternative play for Appchains? And then maybe Jack, you can take the other side of that argument after Kyle's point.
I mean, generally, I think L1s will scale a lot for a while. I think we have a reasonably clear path to somewhere between 1 and 10 million TPS. Beyond that, it gets fuzzier. But like, I'm not that worried about getting to in that range. I think we need to get to hundreds of millions of TPS. But, and so there will be L2s, sidechain. I don't know exactly how that nets out. Maybe it's geographic, and I'm not sure what else. But segmenting it strictly as a function of app, that does not strike me as the right way to segment it. If you look at like how Facebook scales, for example, like it's like literally just based on geography, not based on app. And because they understand like where the most common connections are. And right now, the way you do public key generation doesn't really map to geography in any intelligent way. Maybe it should or shouldn't. It's a separate question of critical neutrality in politics. But like, I don't. It doesn't strike me that like every app needs to have its own chain to get to that degree of scale. So for now, kind of my view is like we stay on the current path to scale to somewhere between 1 and 10 million, and then from there we kind of figure it out. Obviously, you need to run lots of experiments between now and then, so that when you get to that, like you have some more clarity on the right answers. But I think in terms of path dependence, you want to optimize for simplicity here.
Jack, what is your final outlook?
You know, I think we keep scaling out. Like, we have a ton of chains right now. I think this world continues, and we see more and more of these chains. And, you know, the work that we're doing at Strangelove and at Galileo is to build and support that vision. And it's to, you know, ease the developer experience and the communication burden between these many chains and re-enable the type of composability that has made DeFi so special. And, you know, I think that that's the way it's been going for a long time. And Kyle's point around path dependence is strongly taken. Like, I think that we are on this path and we continue down that path. And it would take something like a 10,000 TPS, couple thousand validator chain, which is, it would be a massive technical feat. Facebook threw $300 million at Diem, and Aptos and Sui don't come close to those numbers. So, you know, this is like, I think that for many reasons, we continue into this world of thousands of chains and we figure out how to manage that complexity. And Cosmos is best positioned to do that.
Yeah, I think it's also important, at least from my perception, I'm fairly new to Cosmos, but in my perception, also the idea of Cosmos is not to enforce every dApp to have its own chain, but rather to say, hey, you know, you can build on JUNO, you can build on even on Osmosis that is more DeFi specific, and there's other niche specific layer ones that you can build on top of. You don't have to build your own chain, but it's optional. I think, yeah, there's a lot of cool things. Yeah, I see already movement in the chat, Basil. Maybe we can catch here, Kyle, on the spot. Cosmos, I think you were there last year, right? So are you going to make it this year? Big question.
I would like to make it back to the Cosmos event. Is it going to be in Lisbon again?
It's going to be actually in Medellin, just before DEF CON in Colombia.
I don't think I'm going to make it to this one, unfortunately.
I'll send you details, then you can evaluate. But yeah, thank you so much for doing this. And yeah, I think this was really cool, really productive.
Yeah.
Really appreciate everyone's time. Also, a lot of input. I wish we could get into some of the questions. Maybe there's a part 2 to it at some point if Kyle is down. I got a lot of messages from other core Cosmos developers and builders. They're all ready to debate you. But yeah, this was really cool. Thank you so much. And yeah, we'll see you guys on the next one.
Thanks, guys.
Thanks a lot. Thanks, Cito.